Thank you very much. This is quite exciting to be here, although I must admit that I feel a bit like the dull uncle telling boring stories on a wedding after hearing all these fantastic and interesting and innovative stories this morning. My only innovation is that I don't use PowerPoint. So I want to speak about the competitive future and from a European perspective. And these are three buzzwords there. That's Europe, that's competitiveness, and that's future. I'll start off with Europe. I'll start off with a question. Who of you have ever heard of the World Bank? Yeah. Who of you have ever heard of the European Investment Bank? Oh, wow. That's good. That's very nice to hear. I'll nevertheless give you a short introduction of what the European Investment Bank is. The European Investment Bank is the EU bank. It's the house bank of the European Union. This means two things. On the one side, we are an institution, a European institution. On the other side, we are a bank. When it comes to European institution, that means the governance model that we have. There are the member states sitting in there in our governance bodies. And further, that makes us a bit awkward bank as well, because our statutes say that we're a non-profit organization. Further, the politics determine on which fields we should operate on. In short terms, it is to support investments and to boost cohesion and convergence in Europe, and to secure the competitiveness of the European economy globally, and to sustain employment and productivity across all member states. We have four priority areas. That's research, innovation, infrastructure, environment, and small and medium-sized enterprises. Our business model is quite simple. We lend all our money on the capital markets. We're the sixth largest bond issuer in Europe. The five bigger ones are states like Germany, France, England, Italy, and Spain. And we then on-lend this money to investors to finance projects. We have a project approach. That is, we look at the project, we define it, we look at the costs, and then we can finance up to 50% of that. In general, we are long-term financier. That is, our shortest maturities are 3 years. We can go up to 8, 10, 12. We have done 25 years maturities. Now, Europe is not the same everywhere. We don't have a geographical budgets or targets. Sweden owns about 3% of the bank. But if we look at our lending volume, it's about 2% in Sweden. So we do not have any geographical targets. We have the political will to be in all member states and to support all member states. The needs are very different. And we are a large organization. We are 3,000 people. We sit in Luxembourg, or most people sit in Luxembourg. And from Luxembourg, it's sometimes a bit difficult to see what the particular needs in member states are. So that's why we have decided to open offices in all member states. We opened the office in Stockholm end of November last year. I'm the head of the office. And the idea is to increase the visibility and also to improve the access to clients and to access the client's needs. So that's short about the European stuff. Now talk a bit about competitiveness. Competitiveness of Europe. Well, Europe is only as competitive as the firms, as the European companies, in principle as you are. And the competitiveness of a firm, there are two main paradigms. That's productivity and innovation. Productivity depends a lot of institutional conditions, regulatory issues, the ease of access to markets, flexible labor markets, things that we as an institution have nothing to do with. That's for the EU institutions, that's for public bodies, that's for parliaments and nationalities. Then we come to the innovation. Innovation, what's innovation? I don't share totally the view of the first slide, but there is a certain link between innovation and investments. We see that investments trigger innovations. And that's investments in competitive enhancing areas, such as research development, universities, things like here, this Sahlgrenska area. Further, I think it's of utter importance that we have a well-functioning and diversified financial sector, because all these investments need to be financed by somebody. And the finance for research and development, that has to have different forms. That has to be a risk-taking finance that's adapted to the needs of innovative startups or growth stage firms. And so in order to focus the scarce financial resources we have to the growth opportunities there is. So I'll talk more about investments. Competitiveness depends on innovation, depends on investments, and well, we are a bank. So how is the situation of investments in Europe? Since the start of the financial crisis, investments have gone down, largely, through whole Europe. Today, the real investments in Europe are still down below by about 12% in comparison to pre-crisis levels. We have made, our economists on the bank, they've made a competitive report, and they estimate that to close the gap, the annual gap between the pre-crisis and now, we would need about investments of 655 billion euro in Europe. That's not only investments in innovation, that's investments in energy efficiency, about 100 billion we would need there. Transport infrastructure, 50 billion. Broadband networks, there we have a link to innovation, about 55 billion a year. And to upgrade the water and sanitation systems in Europe, we would probably need 90 billion too. And then you can ask, yeah, well, why does he come with those figures? These are like infrastructure, and then what does that have to do with innovation? Well, there is even a linkage between innovation and, let's call it more boring investments. Because if there are no investments, there is no market, there is no incentives for innovative applications to these markets. And then the investors will look where maybe innovations can be used nearer to markets. So there is a link, even with regard to classical infrastructure. But very true and well recognized, the investment gap is complemented by an increasing innovation gap as well. The European Union, in the Lisbon Agenda, set a 3% goal of investments into research and development, 3% of GDP. And those 3%, they derive from the fact that the United States, Japan, South Korea, they invest approximately 3% of their GDP in research and development. Today, in the EU, we stand at currently 2%. So that's 1% below our major competitors in those markets. And if you take a closer look and define investments in higher education research and development and business research and development, it's even more appalling, because actually, if you look at higher education research and development, Europe is best in class. The investments are higher than in the US, higher than in Japan, higher than in Korea, higher than in China. But then, if you look in the investments in business research and development, we're the lowest in the class. So there seems to be a gap. And there, I come back to your slide, which is right. We're very good in ideas and the infrastructure to get ideas, but apparently there seems to be a gap between then getting those ideas into businesses. I talked about these 3%. one carve-out. Europe is not uniform, and even the investment levels are not uniform. Actually, Sweden is doing quite well. Sweden has among the highest investments. They are around and more or less in line with the pre-crisis levels. Even Denmark, they're a bit lower, but they're about EU average. Finland, they're a bit lower even, but even them, they are more or less over EU average. But even saying that, that's not the reason to lean back and say, well, Sweden doesn't seem to have a problem, so we should maybe focus on other markets or other member states. Our economists have looked more closely into the Swedish market, and there we find, although there is a lot of capital available, in particular for innovations and to take an idea into the innovation stage and even to develop a business idea, there seems to be a lack after that. What happens if you have a business idea, you have a product, and then you want to start the industrialization process, the real growth process? Apparently, that's at least what my economists tell me, there seems to be a financing gap here. If Europe wants to come up to this 3%, we need an additional 130 billion euro to spend annually on research and development. That would be about, plus we need 90 billion to keep up with an advanced technology, manufacturing technology. And if you look at the venture capital financing and compare that with the US, we would need 30 billion more to match those figures. Now, in today's situation, this is even more appalling because we have these huge investment gaps, these innovation gaps, and on the other side, we have a lot of liquidity in the market, plus at historically low interest rates. Nevertheless, what happens, 2 weeks ago, we issued a 7-year bond, and the yield is at minus 25 basis points. So investors pay us money to keep their money. That's weird. Even for a banker, that's weird. It's nice, but it's weird. When the question is, why do they use that money to invest in other opportunities where they at least get back a bit return? And the reason for that is apparently they are unsure. They are not willing to take any risk. They prefer to lose money, but be assured that at least the biggest part of their money will be there in 7 years, instead of taking the risk, making more money, losing maybe a bit money. So there is a great unwillingness in Europe to take risk. And you see that also in the figures of the capital that is leaving Europe. I don't got the figure in the mind, but Europe is 200 billion euro is leaving Europe for outside Europe to be invested otherwise. So now the question is for the future, okay, what can the EIB do about that? What can Europe do about that? Over a year ago, the Juncker Commission addressed this issue, and they came up with the investment plan for Europe. And in the main cornerstone of this investment plan for Europe is the so-called European Fund for Strategic Investments. Now, I'll move back one step. In the beginning, I told you that we are a non-profit organization. And we are very thankful to our owners that they don't expect any payments. The downside is that they expect no losses as well. So also we, as a big organization, we are kind of risk averse. To mitigate that, of these 3,000 employers we have, 1,000 are technicians. They're engineers, they're doctors, they're physicians, they're energy specialists, whatever. So that we mitigate our risk by really digging deep into the project and looking at it very, very thoroughly. That also means that when we approve a project, it normally is easier to attract other investors' interest because we kind of give it the quality stamp. Having said this, the backbone of the European Fund for Strategic Investments And I come to that in a moment, because I just want to tell you, don't be deceived by the name. It's not a fund. It's a fancy name, but it's not the fund. What it actually is it's a separate account within the EIB. But, and that is the backbone, this separate account is backed up by 21 billion euro as a guarantee, as a budget guarantee from both the union and from our surplus. So what can we use this money for? Well, this guarantee allows us, in addition to our normal business, and our normal business is about 60 billion euro financing each year, to increase significantly our lending activity at the high level risk end. And that means that we can develop our toolbox further. Our toolbox normally would be a classical loan. We can play a little bit with the maturities, we can play a bit with the amortization schedules, but in principle they're loans. Now, we can use instruments that have a higher risk-bearing capacity. Still debt financing, but we can use subordinate loans, guarantees, risk-sharing mechanisms, quasi-equity, and even venture capital. One example out of the life science area. Well, actually two examples that kind of give you a flavor also of the risk we're taking. The first example is both examples are from Spain. It's a Spanish healthcare company. They're developing a drug against cancer. Now, I'm not a doctor or technician, so I'm not quite sure. And I got very, very insecure when I heard about the different phases, because I had in mind they were testing the phase 4 for this medication, but I just saw that it just went to phase 3, so maybe I got it wrong. So at least it was the last phase, kind of. And they need a lot of money for that. So we lend them this money, but it's subordinated, and it's subordinated in a way that they only need to repay the money if they get the clearance, if they clear this last phase. So even if we call it a loan, it's in principle, economically, it's capital. And that's a high risk. Fine. But our engineers, our specialists, have enough comfort that they will succeed. And this also attracts other investors. And that's the whole idea with the FC. The European Fund for Structural Investments, the idea is not that we finance all these investments. The idea is that we catalyze, so that we go in and there was other investors go in. For this Spanish company, they need a certain amount to be financed. If we go in with 50% as own capital, the risk of the next person going in with 50% as a loan is a lot lower. And it's a lot more attractive than for them. Another example, also a Spanish company, not the life science sector. We agreed, we looked at the project, we signed the contract, we wanted to disperse on a Friday, and the company went bust on that Tuesday before. So that was luck. If they would have gone bust a week later, then the risk would have become reality. And that's the idea of it. So I can give you some examples of what we did in Sweden so that you get a bit better flavor before I'm getting wiped from the scene. We have a daughter company, the European Investment Fund, which is a fund. They do a lot of guarantee schemes, and they invest in other venture capital funds. And now with the FC guarantee in the background, they can do even more and even more riskier investments. So actually the first FC operation we did in Sweden was a guarantee operation between the EIF and Norrlandsfonden, which allows Norrlandsfonden to provide 180 million additional Swedish crowns of loans to innovative companies. The first FC operation the EIB did was actually an equity co-investment where the bank assumes full equity risk of 60 million euro in a wind farm park. Since then, we did 3 more FC operations. One was Almi, respectively Swedish export credit, about 2.1 billion of further loans, making that possible. And then we did a fund-to-fund investment with Tillväxtverket, which are just now establishing the Swedish Venture Initiative, which is a venture capital fund of funds, and they support and they target early stage high growth enterprises. And a lot of what I've heard, I think, this morning is quite the target group actually, which is nice. The last example is from 2 weeks ago. We signed, we gave a loan to Bonnier AB. It's a family-owned media company, and they receive 100 million euro to support research, development, and innovation, and to the development of a new content, as well as a content delivery platform, so digital media. So I'm running out of time, so conclude. Just one thing.
Yes.
To end with. I hope it's good, yeah. Well, I think this innovation is a thing that is both in the interest and in the responsibility of the public sector and the private sector. So the public sector must ensure that Europe stays the preferred and a very competitive place to do business. And the private sector needs to invest in more products, and most probably a bit go away from this very short-sighted approach. I mean, Europe, also the European institutions, we have been in crisis mode the last years. That's rather short-sighted. Businesses, even more and more, they look at quarterly reports, which is short-sighted. To take a bit of a longer approach might be feasible, because in the end, and that is my last words, capital goes where it is made welcome, and it will stay also there where it's get looked for, and that comprises also like the innovation spirit of the environment, of the public environment, that the entrepreneurship is kind of pushed forward as well as of course hard financing possibilities. Thank you.
Thank you, Alexander. I mean, we all know the necessity of funding, and I think what I hear is that you do take on risk asymmetry, which I think is very much needed to attract capital due to other reasons like tax systems and what have you. And if you're a small company, is it a correct interpretation that it is the secondary effects of what you do that the small company actually notice? Or can they go directly to you and bang on the door?
Well, everybody's welcome to bang on my door, but for a very small company, we don't look that much on the company size, but on the project size. Yeah. But in general, small companies have small projects. In general, the first address would be the EIF, the investment fund, and their partners. So that's Norrlandsfonden and ALMI. And then we can always look, well, which funds target which groups, because some target innovative companies, some target growth companies at an early stage, some target later stage. So there we have different funds. So. And
do you have any kind of risk asymmetry in those investments as well?
Yeah.
Yes, interesting. And being now in Sweden since not too long, what is the thing on your agenda? What will we see as, wow?
Well, wow. Well, the thing on my personal, and that's actually that ESS is getting started off. But this is, we're working hard for them.
Yeah.
The building started, most of you are probably familiar with that. But they have a certain liquidity gap that we're trying to address and trying to find a solution there. Because we think that somewhere innovation starts with this basis research. And this is a very big success for Sweden that the ESS established in Lund, actually.
It must be a success. I mean, there is no alternative. Any questions from the audience?
Yes.
Yes, that was a quick one.
Hey, my name is A.B. Youngblom. I'm an entrepreneur and business angel working in the area of KET, Key Enabling Technology companies, and I read your report from March this year about the situation about KET in Europe, where you compare with the possibilities for growth in that area in Japan and US. And I also noticed that you say there is a lack of competence in Europe in this area. I know this can be a speech for the whole afternoon, so to say, but if you take the key US point about this, what's the problem in Europe?
Well, the lack of confidence is the problem. And now you could say, well, what causes this lack of confidence? Let's put it that way. the way the EU represents itself as a whole doesn't really give confidence to international investors. I mean, things like Brexit doesn't help. Let's put it that way. So that's one thing. And the starting nationalistic tendencies you see is also a big question mark. Then you have these discussions about the trade agreements, TTIP, CETA. Will they be, will they not be? So that's all these things are, and for international investors, those things are crucial. They want planning security.
But you're looking to put up this business and make us better in Europe, I guess.
Yeah.
Thank you.
It's time. Wait, you also need a school book. That's
definitely.
But that's the case.
This is a very good idea. Thank you very much.
You are here. This is very important. Tack så mycket.